Hello, today is Tuesday. It is the 29th day of January 2013. And today's video will focus within the daily chart on silver, which is very usual, and it's up a little over percent, so we'll talk about what's going on there. The homemade precious 4 index, this is something I got put up today, and this looks at the precious 4 metals on an equal rating. Now there's an index, a Dow Jones index for the precious metals, but that is more towards different stocks. And I want to really sway away from that and go to the actual commodity indexes itself. So I'll show that, explain how it's calculated. It's pretty simple. And the 58-day platinum chart, which goes back to 1990. I'll explain why I have a lot of these weird days when I get to the platinum chart. So let's begin. Daily chart for silver. I've been looking at this 18 average and the steps needed for it to reverse direction into that of an uptrend. Now, first, of course, you flatten out, and one of the things it needs to do is have a break above it. Then you come back to its support level, back to this band, and then have a break above the resistance it's established. So that's what I'll be looking for. The resistance established was 32.48. So a clear break above that, and then this trend is looking a-okay, basically. Now, it had that situation yesterday where it found it broke through this level, so I was saying that that level would now be a form of resistance. What occurred today at the, well, around the 31.19 level? Well, it was correcting through time within it for several hours and, well, minutes, basically. And it finally broke above that mark. So now the question is this a failed breakdown below this level? And that's really what I'm waiting to see. What's it going to be? You had this one, then this one, then this one, maybe this one. If you get a lot of them, well, then you're just getting into a choppy neutral market. But you're going to, at one point, get that one failed breakout or breakdown that's going to show the next significant leg move. Okay, so that's really the move towards the that part. Now let's adjust Fibonacci to this high in the same lows of 29.22. And we're seeing a similar kind of thing, maybe. And that is, you're supposed to find support in here, but it's had that clear break below. Now it's gotten up to this level. We don't know yet if that's the case or if we're finding resistance at an area that originally was supposed to be that or was that of support. So therefore, if this is resistance, what I'd be looking for is the move from this low to this high to whatever it happens to be. Right now it's 31.48, 4 cents above the Fibonacci level. So therefore, when it moves down, if on of course the down move, 61.8%, I need to find something that indicates to me that it is a clear failed rally. Thus, it's finding resistance at the that level and holding it for on key time frames for a decent amount. Key time frames is basically Eastern time, like 4 a.m. to 4 p.m. So hold and stay below it for that decent amount. Then I'd be saying, okay, that looks like resistance, and we should test the low 30s level. On a move above it, significant move, which takes you to the high 31s. Now I'm going to be looking for, will we find support at this level, or are we going to continue further up to the high 32 resistance band level? So those would be the key things within that as well. And finally, the running average from this high, when it broke above it here, support, it really needs to break above the high that it established. It came back, found several stabilization within it in here, lower high breakdown from that level. The last break high was towards this mark here. So you're looking for the textbook, okay, it's a failed move by getting above this level, maybe finding support, breaking well above it, and thus making that average rise to, of course, change the trend. Okay, that'll be it for silver for today. Now let's I'm going to go on to that precious 4, but before I do, I want to go over a little bit of math. Yesterday I did the math of the percentage of food stamp recipients, and I gave this number in here. And it's the same as F divided by P. And when I was originally doing the programming to do this, I'm saying to myself, okay, what's the formula I need? And that's really what I came up with. And it's very common for me to actually do more than needs to be done to get the math. I've been programming since I was like 11 or 12, so it's always been on numerous times, okay, what's the formula I need to do this? And I usually do well at getting it. Sometimes, of course, extra steps needed. When I did my original exponential or logarithmic Fibonacci retracement, I went through thousands and thousands of different codes to come up with the number when it was just one small calculation. Anyway, for today's math, how could you find the increase-decrease to find an equal average of 4 indexes? And of course, in this case, it's gold, silver, platinum, and palladium. And I'm going to do it equal weighting, but I guess if you didn't want to do it equal, I think gold would have the highest weighting, followed by silver, then maybe platinum and palladium. And I think all the other ones, like copper should be in there, and rhodium at a very low percentage for that one, of course. But it would give you a good idea of an average, sort of like the Dow 30. But anyway, to find the move, we need to find the percentage move for each one that we're using, which can be done by finding the difference in the period movement, which is closed minus open, divided by the open. Add the 4 together and divide them by 4 to get the average. And then you start with an index. I started with 1,000, and the move would be the percentage price. Multiply the percentage move, and you add the previous price to get the total. Okay, so that's somewhat simple. Anyways, let's show you an example of this right now within today's numbers. So we see in here this that we have silver, 1.69% gain. So that would look like something like that in a number. Gold is 0.48%, so we'll add that. We got palladium at 154, and we have platinum at 96. So those are the 4 numbers. That's dividing it by 4. That's a 1.17 percentage move for the day. So let's go to the first chart. And the first chart, of course, would be the 48-day chart, going back to 1994. All right, so what we're seeing within this is the level of resistance pretty much being found to support, at least right in here. We can see that clearly. 18 average band. How can we tell that this thing reversed the trend? Well, it broke above it, and then you have this stabilization within it. You need to break this resistance clear. It obviously did it right in there. Large move to this level. Now, this pattern, this move will end when this 18 average band has a clear downtrend, and for that matter, the upper and lower bands would be in a clear downtrend as well. So that didn't happen. Instead, when you found the support area, it was that failed breakdown. And then what happens on failed moves? Fast moves in the opposite direction. So therefore, the move would continue. Now we see, of course, this sideways consolidation that's been going on for the last little while. Let's move this on now to the 14-day chart. And within this is basically taking us from the 2008 highs and the 2008 lows. And we're going to put a 161.8% Fibonacci retracement on here. Notice how it totally did not find it. So not always is it going to work well, but it at least can give you a good indication of areas which it could challenge. With that being said, it might still be a great level if, say, it breaks this resistance, and this area is either A, resistance, B, support, or the next one is a massive break above. You don't know exactly how this is going to play out, unless, of course, you're in the know. And let's look at this running average from this high. You notice in here that you find resistance within the area, pull back to the band, and there's the large move above it, and you now start to notice that it's obviously in that of an uptrend. Okay, so that's the homemade Precious 4, as I'm going to call it. Now let's go on to platinum, and let's take a look at the 58-day chart. Now it says 48, but it's actually 58. Now the reason why I use these weird numbers is I use whatever data is required. In this case, I have 5,769 ticks of daily data within the platinum market. So if there's 5,769, you can round it up to 58. If we take the number 99, multiply 58, that means periods up to this here totaled 5,742, which means we are on day 28 of this period. Again, it's just getting the green and red candles within it, and all the indicators that go with it, so you can have understanding of the market. So let's understand this market. Okay, what we're seeing here is that sideways consolidation period. You are above and below the 18 average. When that's the case, you have this average in here that would be in some sort of neutral phase, which it was, on the break. Okay, you break above it in here. There's your original lift-off support from that level, and you establish resistance. Back to that mark. Yeah, you pierce below it again. That's very common, which is why in silver, you can't look at that big push lower as it's got to be weak, although it could be. But with that being said, you find support within this rising band, a newly rising band, and now you're resisting it in here. So now you see this period in here. As you're breaking above here, that's when you can say to yourself, okay, it looks like this trend is reversed. How far is this trend going to go? Well, at least to this high. Now, has this 18 average band done that, what I said in the last chart, start to go lower with the upper and lower bands in a downtrend? No. It had a large pierce below it in 2008, like a lot of the fear indexes do, and this is usually what drives it, is all this extra fear and emotion that is really not healthy when you're gambling, casino gambling, educated and mathematical gambling. Anyway, with that being stated, so it goes back within this band. Now it's trying to continue the trend, or resume the trend. It's established this high. It's got to get above that, to a clear break above, to really say that the trend is in continuation still, and make a run, and most likely a break of the highs. Adjusting the Fibonacci now on this, from this high to this low, and a running average from this high, what we're going to do is zoom in within this chart and analyze it a little bit more. All right, so here we go. Let me just bring this down in here so we can see the bottom. There we go. Okay, so what we're now noticing within this is we have to start from here because that's where the low is. Of course, you resisted this area, a move up to here, which obviously on this period we can see resisted it. Then the next move, it broke above it, found support within it. And now it's breaking above here. And the running average from this level is in place with here. So we've already talked just recently about, of course, what needs to break it. But this again shows you what I like about this. It's really telling me the fact that it's been holding well above Fibonacci for looks like 13 or so periods, that it has a very good probability of furthering its move, at least having a test of this level, but of course most likely making a new all-time high. So thank you for tuning in, and have yourself a great day. Bye-bye.